I'm not recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote and never pay it. You don't need to pay attention to them. I mean, the main thing to do, and you're not going to pick the bottom, and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, to have it go down 50% or more and be comfortable with it as long as you're comfortable with the holding. And I pointed out, I think a year, maybe 2 years ago in the annual report, just the one before this most recent one, I pointed out that there have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, how can you stay with that when something else is going up or anything? You've got to be in the right psychological position. And frankly, some people are not really careful. Some people are more subject to fear than others. It's like the virus. It strikes some people with much greater ferocity than others. And fear is something I really never felt financially. But I don't think Charlie's felt it either. But some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And you should not count on somebody else telling you this. You should do something you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And so you should be in a position to hold. And I don't know whether today is a great day to buy stocks. I know it will work out over 20 or 30 years. I don't know whether it'll work out over 2 years at all. I have no idea whether you'll be ahead or behind on a stock you buy on Monday morning or the market.
Since the last time we sat down with you, volatility is back in a big way, and that has the average retail investor kind of questioning what to do at this point. It's scared a lot of people. What do you think's happening right now, just in terms of the return of volatility? Is it something to be worried about? What's causing it?
Well, if you own stocks like you'd own a farm or an apartment house, you don't get a quote on those every day or every week or anything. You look at the business, and the value of American business depends on how much it delivers in cash to its owners over between now and Judgment Day, and I don't think it changes in 10% in a 2-month period if you're looking at it as a business. Now, you've got anything can happen in markets. I mean, anything can happen in markets, and that's why I say don't ever borrow money against securities. That markets don't have to open tomorrow. I mean, you can have extraordinary events. So I think to some extent you can get some of the instruments that people don't understand very well that have a lot of firepower in them.
Like
and
the volatility index and things that are tied to that.
The idea of people taking a position, and they're gambling. They're not investing. Nobody's investing when they buy, some supercharged index on how the VIX does or something like that. They don't need it in their life. It's an unnecessary instrument. Now, they will create instruments that the public will buy, and you can just count on that. Wall Street's been doing that since they met under the Buttonwood tree in 1792 or whatever it was on the exchange. So, but if you're investing, if I'm going to buy a half interest in a McDonald's stand and you're going to run it, or a McDonald's franchise, you're going to run it, I look to the business to determine whether I made a good investment. And I'm concerned about, whether we have new competition, how we do over the years. But it's the business I look at. When you're just looking at the price of something, you're not investing. I mean, if you buy something, Bitcoin, for example, or some cryptocurrency, you're not looking to the asset itself to produce anything. If you buy an apartment house, you're looking at how the apartment house does. If you buy a farm, you're looking at the farm does. If you buy a whole business, you're looking at how the business does. If you buy a part of a business, why shouldn't you look at how the business is going to do? But people get charmed by lots of action and the fact that things are liquid and all of that. And it does have repercussions back into the market when you get something like, an ETN arrangement on the, supercharged on the VIX, I mean, where you can lose 90% of your money in one day. I mean, that really doesn't belong with the word investment. I mean, it's a gambling.
Warren, again, for people who are just waking up, they're tuning in and they want to know what you think about this sell-off this morning. To see the Dow down 700, 800 points in the morning, what's your reaction when you see something like that?
Well, my reaction is that I like to buy stocks, so I don't wish ill on anybody else, but I like to, if they want to sell them to me cheaper, I prefer it. So if that's roughly a 3% decline or thereabouts, I don't know how many 3% declines I've had in my lifetime, but there have been a lot of them. And I can't think of one that you shouldn't have bought on, basically. That doesn't mean stocks are going to go up or down next week or next month or next year. But if there's something, if you like to own American businesses, you're getting a chance to buy it 3% cheaper. I don't consider that a lot cheaper. I mean, but how can it be bad news unless you have to sell stocks? Now, if you have to sell them for some reason, you're worse off. If you don't have to sell them, I mean, somebody can come around and offer you a quote on your house today, and it can be 2% less than they offered you yesterday. But if you like the house, it really doesn't make any difference to you.
Does that mean Berkshire will be buying stocks today?
Well, we certainly won't be selling. And yeah, we could easily be buying something, sure.